Hi, this is Joe Sangl with Fully Funded Life, and I travel the nation and I teach financial learning experiences, maximize and magnify events and other teaching events. And we use a product called Slido.com that allows people to ask their questions many times anonymously. We can't possibly get to all the questions. And so we have a series called If I Had More Time, where we answer many of those questions. So let's dive right in. Question that was asked is, what do you think will happen with inflation? This is being asked in February of 2024, and I believe inflation remains sticky. It has declined. It is not nearly as severe as it was over the past 2 years. However, people still have excess cash. They are still spending, and as a result, demand has outpaced supply, which causes prices to go up. Look up, just Google quantity theory of money, and you will see that it says if money supply goes up, inflation is bound to go up. To control inflation, the Federal Reserve must increase interest rates. Why? That will limit the supply of money and thereby drive down inflation. Have you seen inflation, interest rates going up? Yes, you have. And as a result, inflation has been going down. The Federal Reserve has signaled that they may believe that they will start decreasing rates 3 times in the next year. Put Joe Sangl on the underside of that. I do not believe that is the case. I believe inflation is continuing to be sticky, and we may see 1 interest rate decrease. I wouldn't be surprised to see no interest rate decreases this year. I don't know how many financial experts are saying that right now, but inflation is sticky. I know it. I travel all over end to end of the nation of the United States and Canada. Inflation is still happening. And so with that being the case and people still spending, there's no reason for the Federal Reserve to reduce rates, thereby increasing the money supply, which will be a stimulant to further inflation. That's Joe's thoughts. I could be wrong. One thing we know is time will happen and we'll know whether or not I was right or wrong. Cody asked a question. They put their name next to it. I like it. How can I pay my car off early? Well, it's a simple answer. I don't mean this meanly, but you pay it off early by paying extra towards the principal. We have an early payoff calculator on our website. We'll leave a link to it in the show notes, and you can type in the current terms of your loan on that car. You can put in the interest rate, what you currently owe, and what your principal and interest payment is, and you can put in different amounts that you want to pay extra. $10 extra a month, $50 extra a month, $100 extra a month, and it will tell you how many months sooner it will pay off and how much interest you'll avoid paying. That's how you'll pay it off early. And I encourage you, use the calculator because you'll find out $50 extra a month, $100 extra a month can do huge things towards paying off that car months, if not years earlier. Great question. If I currently lost my spouse and I was left in financial ruin, how do I begin to start a new plan? I hope this is not the case. I hope it has not happened, but it sounds like it has. So you have lost your spouse and you're in financial ruin. How do you begin to start a new plan? Well, first off, I am so sorry. This is one reason why I'm such a fan of people having life insurance. You never know when you could die prematurely. No one votes for it, yet we see it happen. And this is how you can avoid your spouse writing this question in an event one day. However, this is the reality. So the first step is to define what reality is. Where are you at? You need a coach to help you because you are grieving and you are mourning loss, and you may have bitterness and regret because you've been left in financial ruin. And so I encourage you to get counseling and have someone help you with grief counseling and financial coaching that can help you to clearly define financial reality. And as soon as you have that, you can understand what your new foundation is to build from. Maybe you're not as in bad shape as you think you are. Maybe it's worse than you think you are. But the first step is to define reality, and only from there can you begin building a new life towards your fully funded life. So really, I encourage you, join like a grief share group, that's going to be hugely beneficial to you. And make sure you have a financial coach to help encourage you, provide hope, and they will be able to see things more clearly because they're not emotional about your money situation, and they can help you define reality so that you can begin to make progress. I'm so sorry you lost your spouse. Great question. What are some tips you would give someone living paycheck to paycheck? The first step is, I would say, go look at your spending decisions over the last 30 to 90 days. Look at your credit card statement, look at your bank account statement, and find out where your money has been going. As you look at those decisions you've made over the last 30 to 90 days, identify the ones that you, if you were given the ability to make a new decision, you would not have done. Many times you will find that because you're living paycheck to paycheck, you tend to give up and you just live for the moment, and you tend to spend money more flippantly. So identifying that could take an hour or so to identify those decisions, and then learn from that. Say, what could I do? What could I learn from these past decisions that I can put in place new habits so that if I look at my financial decisions 30, 60, and 90 days from now, I would like the way I'd spent money better. Tip number 2, prepare a budget. Get a budget. When you put together a plan for every dollar that you are going to receive, and you demand of yourself that you're able to give, and that you're able to save, and that you're able to invest before anything else happens, well then, it will make things more clear. And then, make sure you define your why. There's a reason why rung number 1 of our fully funded life ladder is to set goals, to write down your plans, hopes, and dreams, because that will compel you to prepare a budget, and it will help you say no to things that you really want to say yes to. We all want to say yes to all the fun things, but if you can get yourself to say no for a little while, pointing at your plans, hopes, and dreams that help you stick with it, well then, you will be able to start taking steps to get out of living paycheck to paycheck. Those are some tips that will help you greatly. I used to live paycheck to paycheck. That's exactly what helped me get out of it. Great question asked by Anonymous again. What is the best and most stable way to start investing as a 27-year-old? Is it a Roth IRA, mutual fund? Now, I love the way that people phrase questions because this tells me this person is new to the world of investing. Because they said, is it a Roth IRA mutual fund? Those are not the same things. A mutual fund is a fund that you can invest in that is mutually funded by you and hundreds of thousands of other people. And then mutual fund managers, according to the charter of each mutual fund, invest those dollars for you. That can be done within a Roth IRA. It can be purchased in its own trading account. It can be in a regular IRA. It can be in a 401k or 457. So they are not the same, so separate them. The Roth IRA is a structure that gives you certain tax protections. The mutual fund can be in any number of structures, including no structure at all, okay? Number 2 is, I would say yes, purchase an index fund, a 500 index fund within a Roth IRA. That is, I can't say it's the most stable way, but I will tell you long-term, it will be the most stable way. It is proven to be one of the greatest wealth building tools is to invest money into a 500 index fund, mutual fund. It's a type of mutual fund within the bounds of a Roth IRA. If you do that and come see me in 40 years, well then I'll be 90, you'll be 67, and we'll be really glad you did. I have one other questions I can tackle. And it says, how would you tackle student loans while simultaneously trying to build your foundation for your family? It's rung number 4 of the ladder. Just put it in rung number 4 of the ladder to eliminate all non-house, non-business debts, and just start at rung 0 and work your way up. That's exactly how you should tackle it. Hey, thanks so much for watching another episode. If I had more time, this is what I would say. Thanks so much for joining us. If you have questions, we'd love for you to ask them. You can ask them in the comments below. Who knows, your question may show up in a future edition of If I Had More Time. And if you have other ideas, other tips, make sure that you share those as well. If you would, give us a thumbs up, give us a like, and subscribe. That would be a great gift to us, and it would allow us to continue to build more content that helps you move up the ladder to live your fully funded life. Hey everyone, Joe Sangel here. Thanks so much for watching this episode. Hey, I encourage you to check out our other videos that are available here. If you like this, hey, every single week we're producing new content that is to help you with right now relevant information. So make sure you click one of the links and check out some more of our information. I think you'll be so glad that you did. I know your wallet will be glad you did.